Alright everyone, here we are with ticker symbol IDEX, Ideanomics Inc. And before we jump into this chart, I want to say welcome to all the first time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back, and let's jump into this chart. So I had stated yesterday we needed to watch this carefully. It was getting closer to the 50-day moving average. The support, was at a point where we were seeing this in a downward trend, and it was a very subtle downward trend, and here we are continuing that downward trend. I mean, it's kind of not so straight as you could see it, but my drawings are terrible, but you could see it. It's continuing that downward trend. We had some numbers to keep in mind here, 211, then we're down here now to the next ones, which is 208, and now we hit newer lows, so we have even lower points to pay close attention to, which is 192, and down here at 201. I think that if this stock holds itself up above $2, it could be a good sign that there could be a rebound working its way back up, but we need to watch it carefully. This is going down pretty fast, but when you think about it, there could be some profit taking going on and just a little bit more due to the fact that the whole entire run that happened from 210 to 280 has kind of disappeared. And then a little bit more that probably kicked in some fear and uncertainty to a lot of investors that have been in before that 211 mark. So we want to watch this, like I said, very carefully and what's going on here. But a lot of investors are feeling bullish and long on this one, especially after the reversal has started, right? From down here at 166. I'll never forget it. I did that video talking to you guys about the MACD and different moving averages that I used and the closer moving average to go ahead and see what indications were showing, and the indications were all turning. Obviously those three indicators all used together in the 50-day moving average don't always mean that, but all the indicators were showing a reversal, right? And just because they're showing that doesn't mean that they always happen, but it is really good to use different indicators plus looking at the chart to have an understanding of what's going on. And that's exactly what happened. We saw the reversal and it started running up from that point. It reached highs here of about 240, came down, consolidated, ran up. But something that happened here is that we got no consolidation. We did not get a consolidation here. We have actually received a big downward trend that we need to watch carefully. So I'm going to do this very narrow here, and we're going to talk about it very broad afterwards. So I want us to tune in very closely to these numbers. So the 50-day moving average is 231. Super important number. As long as we're below it, we're in bearish territory. The moment we're above it, we're in bullish territory. The first resistance level that needs to be broken through after it breaks through the 50-day moving average and gets back into bullish territory is 246. I'd write that down. Very important once we're back up. Now, on the downside of things, we already saw there's a new support, and the next support would be down here at 201. I believe that if this can hold itself up above 201 or even $2 and bounce back up and rebound, the bulls have a shot here to get back up and continue a momentum. If it breaks through that, we may see newer lows. After 201, we have 191, right? Give or take 192. But to be exact, 191. Write that down as well, according to the volatility of how the stock is reacting in the downward trend. Now, the next resistance level, once we break through this resistance level that we're about to talk about, for this to start heading closer to the 50-day moving average, which is the highest point before the fall, it is 223. That is your midway point between 50-day moving average and our current resistance level. And then you have the 50-day moving average as the midway point between 223, 50-day moving average of 231, and between 246. You want to kind of dissect this to see how it's reacting at these levels. But here, 223 is your next resistance level. So let's talk about support. Support is 204. If 204 gets broken through, this could be on its way down to newer lows, hitting newer support levels, and getting deeper into bearish territory. I want every single investor to be aware of this and pay very close attention to how this stock is reacting between 204 and 201 and how quickly is it moving down, and are the bulls trying to reappear? Okay, you want to keep that in mind. Now our resistance here, the first resistance level to continue this momentum is 211. Now if 211 gets broken through, it does not signify that the bulls have gained control. It does not mean that the bulls are guaranteed to get back over the 50-day moving average. This is just an indicator for us investors to know that the momentum is continuing. If 211 can be turned into a support, the bulls can bounce off of that and reach newer highs, getting closer to the 50-day moving average, but not guaranteeing to cross it. But every step up of momentum is one step closer to the bulls' goal to get over the 50-day moving average back into bullish territory. So we want to keep every single one of these numbers in mind, but we want to watch it very narrowed in as well to see who dominates quickly. Are the bulls going to continue this momentum pretty fast? And then we get to see how it's reacting between 211 and 223. Or does it break through support? And we're going to see how it reacts between this support and our next support levels, which is 201 and 191, and see if the bears continue to dominate this trend downwards. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and in that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. As you see here on the graph, these circles are the dates that the pumps have happened, and I use them as examples to show you guys how much the stocks have risen, and the S&P 500 index rose on those dates. And the reason why it's rising is due to the fact that the Federal Reserve is pumping the markets. On these dates, the charts and the dates speak for themselves, as we can see it here, and I break it down into more detail in the video. But just to summarize it, on these dates, the S&P 500 rises, and there's individual ticker symbols rising up with it, anywhere from 30 cents to $3 per share. I know it may not seem like a lot, but per share that does add up, and these individual ticker symbols are giving you back profits. These are profits, and like I always say, profits are profits. Whether it's $1 put into the market and you get back $2, you've put in an initial investment and you got back more than what you started with. That's what it's all about. And also in the video, I go into further detail showing you guys these dates and showing you how much it rose. Like for example, this was one of the last pump dates, and the lowest point that it reached was down here at 35.11, and the highest point reached was 35.57. That's like a 40-point jump. And here we're seeing the same thing. It went down to 35.88, and it rose up to about, I'd say, let's see, this is all still in the same day. It rose up to about a total amount of 36.23. When you do the math, that's almost a 40 to 50 point jump, and there's individual ticker symbols rising up with this. Now, I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything in particular. I'm just here to inform every single investor on the great news, on the opportunity to maximize profits and minimize losses. You have to do your due diligence and research, but these charts and the dates speak for themselves. I mean, this was probably one of the largest jumps that I've seen in the last couple of pumps, and it was down here at 33.02, and it rose up to about 33.88. That was an 80-point jump. There was probably ticker symbols rising up more than $3 per share on those dates. And even on these dates, there's individual ticker symbols rising more than $3 per share. Check it out, see for yourselves, and my best advice is look for ticker symbols that may be resembling the behavior of the S&P 500 index, and you'll be able to go ahead and give it a shot. Check it out. Again, I'm not there to tell you to buy, sell, or hold anything in particular. I'm not there to guarantee you profits. I'm just here to go ahead and share the information along with every single viewer and investor. The video should be popping up soon. If you haven't seen it already, pop up. There is the link down below in the description. Thank you guys so much for watching, and let's make some money.